In this video, we're going to talk about Rivian, and after the $5 billion infusion from Volkswagen, which saw the stock rise more than 30%, stock is now up roughly 25% over the past month. The question is, what happens next? Well, technically, price is back at this weekly sellers level, in which we're going to have a battle between the buyers and the sellers. And that level was formed back in February when you had this drop in price, several basing candles, and then the drop or the leg out. What's crucial about this level here is that you have this support resistance band nested within this weekly seller zone at $16. And taking it back down to the daily chart, what you can see is that on the surge, you had some profit taking, but you also had the seller stepping in, which pushed price back down. But because of Tesla, because of NIO, sentiment is now positive in the EV space, and so this down decline was short-lived as prices are creeping back up into this weekly sell level. Now, typically what happens as you penetrate a zone, you are eating up, in this case, unfilled sell orders. And so my point is, this level is almost used up. And so next time price enters the zone, should be easier for price to continue to move higher. What you also have is price contending with this 200-day moving average. And right now that's serving as resistance. So you have several reasons to not go long at the moment. You have price back at a major support resistance band. You have price coming into its own within this weekly sellers band. And you also have price contending with this 200-day moving average. However, as I mentioned, momentum is now to the upside as your moving averages. You have your momentum moving averages, which is the blue and the orange, and you have your 50-day moving average about to cross up and over the 100-day moving average. So for Rivian owners, potentially good signs are ahead. Now again, the deal with Volkswagen was huge, burning a ton of cash and running out of money from its initial public offering. Rivian can utilize the funding to support scale its operations and hopefully reach positive cash flow. The $5 billion deal with Volkswagen comes with multiple steps. There is an initial investment of $1 billion and then $4 billion coming over the next 2 years. In addition, $2 billion of future investments will be in Rivian equity, while $2 billion from Volkswagen will contribute to the newly formed joint venture. Now, at the end of the Q1, Rivian had a cash balance of $7.9 billion. While it seems like a lot, the company is burning $5.6 billion a year in free cash flow. So this new funding extends Rivian's timeline for achieving profitability. The deal not only gives Rivian a cash cushion, but also a huge partner to deploy its advanced vehicle software and technology. According to the announcement, Volkswagen is planning to deploy Rivian's electric hardware and software system for its future vehicles beginning in the second half of this decade. So you got the backing from one of the well-known car makers in the world, and on a larger scale, you have this inverse head and shoulder, and so the charts are suggesting the bottoms are in, and look for price to move higher the rest of this year. Thanks for watching. Subscribe. Please like the video.